There we go, Jonathan. Thanks for the heads up that I was muted, but I was just saying welcome everybody to the stream. Hope you like the topics we're going to get into today. We have some fun ones. There's a lot going on in the market. Be sure to like the video, share with your friends, and subscribe because why not? But without further ado, let me get into the topics that we're going to be talking about today. Um, so obviously, like most of our streams, we start off with a quick update on how the markets are looking today, the SPY and the QQQ. So George is going to share his view, and I'm also going to ask him about a chart he shared in his newsletter yesterday, which let me share a link to that for the people on YouTube right now if you're not subscribed to getting the newsletters. This chart was fascinating to me. And I really wanted to talk about it today because um, I think it'll help people understand kind of the dynamics that are playing out in the market right now. All right, so I'm dropping the link in the chat for everybody if you want to go check that out. But the chart was basically showing how tech stocks are contributing at their highest point ever towards growth in the market. It was above 2 standard deviations, which has only been twice in the history. Let me look at the years right now. About 1970 and 2000. So, and today, and it's higher today. So we'll talk about that and what that means for the market going forward. There was a big news event that happened this morning where the EU launched an antitrust probe into Apple, Meta, and Google. And we'll get into what that means for all of those stocks. Kind of seems like these news stories are having less and less of an effect on these companies because it seems like they happen all the time, seemingly at least, and nothing really comes out of them. So we'll see. We'll talk about which company it hurts the most, if it hurts any of them significantly, um, and what it means for those businesses and those companies. Next, there was a $1.2 trillion spending package signed last night. It will fund the government through October 1st. And it's very interesting to me, which I'll share with George also, how times they are changing. Because if this story happened last year, there'd be a ton of public outrage over the inflation and the trillions more dollars coming. But it seems like that's not really the vibe and the narrative that we get in today's market, which shows you how the risks and the things people care about most are changing today's market. Welcome, George. Welcome to the live. Good to see you.
Good to
Just
see
heading
you
over
too.
that.
Busy morning, but it's been like that a lot. I think it's a busy morning, but one that we are well positioned for again, I'd say.
Yes,
Got
busy is
in
good.
got in SMCI again at the right time.
hmm Uh, and it's funny you mentioned SMCI. I got two more stories to go through, but one of them is about AMD and Intel and how their chips are being banned in China, government PCs and servers, and they also want to block Microsoft Windows. So a little back and forth going on with China and the USA and these chip companies right now. Um, and a story we actually held off from last week because we ran out of time. But I know Wolf, if he's in here today, he was interested in the story. It's about Take Two and how they're going to be releasing GTA next year, and maybe it's a possible opportunity for investors since it's so early in this news story, and there's a long time before the game is actually released. Um, and like obviously for everybody, we'll end the stream. Mondays are our marathon streams with a little model portfolio update. If you haven't seen those before, George goes through and actually picks the stocks that he sees. Oh, we got a comment. And George, do you read French? I think that's French. I can't. Don't mind
Yeah,
if you
he's
want
asking if we speak French. Uh,
to.
je parle français un peu. Not enough to do a stream though.
Did you just say a wee bit?
Yeah, n'est pas un stream.
I'm lost. I took Spanish in school.
Yeah, I would have done better with French. Um, my older sister and my mom actually speak it fluently, and I like a true French education they mostly just made fun of me for not speaking French as well as they could. So it wasn't a great time in school when I'm already like I'm I'm good at a lot of things, but language is not one of them. So yeah, I think that was sorry, don't mind. We'd love to be able to help you out, but for just not strong enough in French.
Do we want to start getting into our market update for today, and looking at the SPY and QQQ and what we're seeing going on? What do you want me to
Yeah.
keep? Because the market opened lower today, but it seems like it's kind of fighting back a bit. What are we seeing going on today, George?
Yeah, I mean, I woke up this morning and it was one of those things where this is just where like, obviously the Prospero signals don't greet you upon market open. Um and then or I should say pre-market. So one of the things I was just like looking at it this morning and I just wasn't buying it. I was like text too like I would have bought it more if it was like a fierce like downward like like kind of where I got out of some of the tech names last week. It just wasn't like a powerful enough move for me to think that there was any kind of decisiveness. It felt like you know, people, institutions maybe trying to shake people out before they started loading up again. That was my interpretation. That looks like what it's like. Um, I mean, obviously, there's a story that we'll talk about a little later. But yeah, I just like pre-market is, I would say like one of the reasons I've been using it more is like you really have to like instincts are everything paramount in that and because we're not getting all the information that we'd want and my instincts this morning were just telling me that I wasn't there wasn't a good enough reason to kind of sour on the tech momentum that I saw. Um and I think it really like, yeah, that proved out pretty quickly. So I was right. I was pretty tech heavy, but that's one of the reasons why, as I explained in the newsletter, we had our LPL short, we had our Xerox short. So even though we were 4 long tech and 2 short tech, it was enough for me to be like, you know what? If things go wrong here, I think they're going to go wrong. And LPL is, way, down today. Um, so I was feeling pretty good that if there was any tech problems, that we had some coverage, and that's a big reason. I would have been much more inclined to move off of like our big winners, our big movers, um, if it wasn't for that. Um, and for those that don't know, in terms of Coinbase, that's a different thing. The technicals had actually soured on this, but since Bitcoin moves over the weekend, I saw Bitcoin going up, so I might have gotten out. I might have considered getting out of Coinbase, but seeing Bitcoin doing well over the weekend, I was very much just like, oh, definitely hanging on to that one. So that I knew I was going to kind of be coming in um, with a somewhat strong, um, which with a somewhat strong uh, start. So I think that yeah, other than that, I just held the rest of the tech. So like SNPS, Nvidia, what are all my tech names as a review? Um I don't know why, but the shorts are not updated. Like the new shorts are not updating today. Um a little odd. Um but nothing I can do about that for now. The new short positions DI, SPC. Otherwise, I think we'd be well over like 250 above because SPCE is down. Um, so yeah, not sure what's going on there, but oh yeah, I got a little sidetracked. So yeah, so we have SNPS, Coin, SMCI, Nvidia as our tech longs. We've been doing well on those allergy longs. Eli Lilly is kind of like tech adjacent. It tends to move. I've seen pretty similarly with tech. And then look at that. We're already up again on our fifth SMCI position earlier today. Oh, and one other thing in terms of like following the letter, we're talking about the letter, what I did. I'm getting some requests, and please, if people have opinions where they're just like, we still want you to post your moves in the chats, and I'm like, well, it's all in the letter, and I think it's there with context, so it's kind of good. Um, but anyway, the one thing that I wanted to say about like some of these moves, and I've been getting questions because I've been making a lot more moves this year than I have in other years. And the big thing there, especially last year, and the big thing there, I would say, is that, if you held SMCI since our first, let's just do a um, quick and dirty math here. When we first bought SMCI this year, let's look. Was it that late? Oh, it can't be. Oh, no. It was 117 was our entry, right? So if we look at 117 until now, 117, I think it had already started going up by then. No. So 318 to 1068. I'll just do that math pretty quickly. Yeah, I mean, I think if you just held the whole time, you'd have a 335% increase. Now, I'm not sure if 335% increase, how that compares to for that hold period. I can actually do an annualized analysis of that, and it's pretty good because obviously the annualized is going to be higher if you have shorter hold periods. So I'd actually be interested to see that analysis. Needless to say, like if you're just like, wow, there's just too much up and down in this portfolio, hard for me to follow, you don't have to get the returns, right? You could have just held SMCI since our first thing and just ignored me getting in and out of it. I get in and out of these stocks, or I make a lot of these moves because I'm trying to exemplify exactly what I'm reading in the market to give you guys as much information on how I read that. Whether it be my model portfolio, which is obviously a much different approach and a much more like, a larger portfolio, quicker analysis, or the newsletter picks for the investing letter, which are smaller portfolio, higher conviction. Either way, you're just getting like how I would exemplify that higher conviction strategy or lower conviction larger portfolio strategy based on how I'm reading things. That's all, and that's for people to do what they will with the information. But I think that's just a really key distinction. I always say none of these portfolios are meant to be copied, and I wouldn't recommend copying any portfolio exactly versus kind of applying your own logic. Just because uh we you don't have my experience. You don't have 20 years experience. And not only do I have 20 years experience, I have experience on the value side. I have experience on the AI side, the modeling, the data science side. I'm dealing with a breadth of experience that most people don't have. So the strategies that you can employ and the inferences that I can make around that and the time I have to dedicate to it is very different, which are all very important variables among also like your risk tolerance and how much money you have, how much of a nest egg you have, how easy it is for you to lose that, and not put any strain on yourself. All of these are just very, very important factors. So I think that that's kind of like I wanted to answer that specifically at Open because I think that that's very important. Obviously, to zoom out a bit more, other than this like very specific advice on, SMCI, we're very bullish on tech still. We think that like we've been rewarded on that. Even just looking at the QQQ and SPY and option sentiment, yeah, there's these blips up and down, but they've been firmly in our bull zone, which we haven't moved for a long time. So obviously that remains us bullish. QQQ had some blips down, which made us a little nervous, right? And we adjust accordingly. But the overall trend is that they're very, very high over our bull zone. And for those that have read us longer, are more familiar with what we do, et cetera, one of the things that we do there is that we, make sure that we move it accordingly. So like the SPY net option sentiment has run lower, and it's been as low even I think this year as like 10 being our bull level and 10 being our bear level and 20 being our bull level. And now it's up to 30, 40, the same thing as QQQ because it's run so high. But if we were more nervous about these indexes, we've left them at 30, 40, both of them for a while, I think probably at least a month. If we were more nervous about that, we would move our bull level up to like 45 and maybe the bear down to 35, just because we'd want to say like, okay, well, if either of these went below 45, then we'd be concerned. But we've left it up because we just think that staying above that level of 40 is a bull sign. So we haven't moved it up. We haven't been concerned enough about a potential turnaround that we moved it up, if that all makes sense. I'm getting some tea while you tee up the next conversation. I mean, the next topic.
No problem. Um, so one thing I forgot to actually mention in the opening is that the market will be closed on Friday. I wanted to ask you if that changes any way you'll make moves throughout the week or changes any kind of strategy or if it affects really anything at all or um, if it's just, the market's gonna be closed. I'm sure for long-term investments, it doesn't mean anything really, but maybe on like a short time frame, I don't know if it'll change the way uh, someone should trade or would trade.
It just means my life is going to be a little easier, Steven. Like these days, it's just like there's just way too much for me to do um, to miss out on a day of the market. So, like, even when I'm doing other things or, right after a meeting, checking my phone as much as possible, not during. Um, but yeah, I'd say that it is. Um, It's just, I wouldn't read too much into it. I don't think trading changes too much. I mean, it's so like this is one of the things that it's like I hate one size fits all advice. And that's why like some people like one of the things about like this like hold period thing. They're like, were you planning to hold Mercado Libre? That's what it came out, Mercado Libre for that long. And I was like, no, well, I wasn't planning to hold it for a long or short time. I was planning to hold it for as long as it made sense. And I think that's very good general advice where it's just like I think a lot of the times more novice traders want to like grab onto rules based systems like oh like in a 4-day week that this trading pattern or blah blah blah. But the truth is that the best advice I can give any of you is there are no rules on Wall Street. Like there are you the more you try to like wrap your head around it, like I have a process which is different than rules. My process that I do in the newsletter where I check technicals and I do that, that's just a way to reduce risk. Ultimately, like I'm not applying any rules. Like in a perfect example of that is sometimes I will, take longs that have a sell oscillator or buys that have or shorts that have a buy uh oscillators and in the technical thing that we pull up. Of course, I do want to see the moving averages and the overall still be in buy, but the oscillators, can, those are the ones that like I would say depend more on like RSI, and we talk about that all the time, where I think stocks can still go up, even if the oscillators have switched on a long. So that's a really good example of the difference between a process and rules, right? If I had rules, I wouldn't hold during a sell if I wouldn't hold a long if I see a sell oscillator. And the truth is like I'm that might be enough to get me to sell along, but it might not. So I think that's a really good example of process through rules. And like I think people try to build rules out of like things and they try to like grasp at them to be like, oh, like I know this because of this. And like generally, if you're doing that, you're not doing it right. Just as a general tip. Um, but the last thing I would add to that is like to drive home the process lesson, right? You might say that like, oh, I actually frequently observe a lot of volatile trading at the end of the day at a short week. I haven't observed that. You might think that you'd observe that, right? So you might say, oh, I might develop a process to exit a lot of my positions if I see certain triggers on these shorter weeks, right? That's an example of a process. But the difference between the process and the rule there is you might get to this Thursday and think that like generally because of volatility you sell, but you're not seeing the signals that you want to see. So you're willing to decide not to apply the process. And I think that rules are not helpful because Wall Street is just not. The more you get rules, the more Wall Street is going to like sneak up on you. But process um, is very important. And you hear me talk about it all the time.
So Spiky Dude's asking a question about melt up. It's a phrase he's seen circulating, but not sure where the idea comes from. So maybe we could help him out with what's going on there.
It's like a very memey term, I would say, like meme stock retail types. Like it's not a real thing. Like it's a term for, I mean, it might be sort of attached to technicals, but I don't really consider technicals a real thing in terms of like how you'd read the market. Like it basically just means like it's going up a lot, and a lot of the time, like, tearing through highs. You're, like, melting, previous caps. We keep hitting new highs in the market, so you're, like, melting you might be, like, melting the barriers if you want a visual. If you wanna, like, if you consider, like, these, like, RSIs or, like, whatever, like, EMAs, if you consider them, like, um or like levels, you consider them, steel bars. You might be melting them to get past. I believe that's where it comes from, but like I think it just means the market's going up like a lot and probably breaking through. But like what I would say to that is like anyone that's using terms like that is probably more likely a pumper than has any good information for you. So I would probably disregard people that use like, a lot of language like that, unless they put it in like quotes and there's like quoting, that's a very different thing. But if they're like legitimately saying like we're melting up here, like they're probably not a great source to be looking at.
If someone said it like that, it would seem like a very blanket thing where they don't really, it's just kind of covering all bases. But you mentioned in the opening how you're still bullish around tech, and we got a story today, and maybe you could say why, even in the face of this story, where the EU announced an antitrust probe into Apple, Meta, and Google. And, it's not the first time we've heard this. It seems kind of like these stories are happening on a more regular basis. Um, and it seems like nothing really comes of them, or the companies are just able to keep growing, keep getting more. I mean, these companies are multiple trillions of dollars now. It's kind of like the boy who cried wolf, these stories. But so does this hurt either one of those stocks more than another, Apple, Meta, or Google? Or you think they're all kind of a non-concern in the long run for these companies?
I mean, I think that like it's kind of where we're totally at on everything here, which is that um Apple's in the biggest trouble of any of these companies. I mean, I think it kind of hurts all of them, but I think Google and um, Meta are going to see such growth, and they're in so well positioned that and we even see them at like better values in these other things. Which I think part of the reason they're at these values is there are regulation concerns, but I think those regulation concerns are probably overblown. Um, so I would say that like Apple and everything that we're talking about, especially like the way they're dealing with the App Store, like Google has shown an ability to like give more with their like, Android service. So like they might even be able to settle it, but Apple's like having like, much more problems with growth in their business. So I think that that kind of makes them the most vulnerable. But like some interesting stories about like how this can actually affect. Like I've definitely seen like Uber in London being in a very interesting situation where it doesn't even work anymore. Like for those that recall, there was a stream that I was like very late for because like it didn't give me an accurate trip estimate at all. It told me I was going to be home like 2 minutes before the stream, and I arrived like 20 minutes after it ended. And that's actually because, for very interesting reasons, data sharing, right? I think especially Uber was targeted because of all their like kind of dirty deeds. I think people like, these watchdogs paid a special eye to them. And I think now, like, because they can't just like pull all this background location data from people, that their AI isn't even very good at predicting the traffic anymore. And like part of that is they're just not getting any more rides. But I think that's kind of like spiraling down for them where they're not a very good app. They have less drivers because they're not a very good app. And then, that's giving them like kind of less intelligence on the traffic. So I think that that's like a very, very interesting story that we're starting to see. And like, by the way, it's one of the reasons like that Prospero collects data with explicit consent. Like only for those that have been with us for a while, we did ask questions in our last app. We decided not to do it in this app because some people didn't really understand why we were doing it and how they were seeing the data. And of course, we've explained it a lot on this stream here, which is that long term, we're going to use user collected data to feed back into the predictions and make it better. It's a very, noble pursuit that we're on, but we want to make sure we have more education around that by the time we launch it again. And we have no problem just giving the signals away for free without collecting data back for now, like not at all, because we do genuinely want to help people and earn trust. But one of the reasons we do it that way is all of this like GDPR stuff, data rights, I think is going to create, problems for these companies. in the long term. And I think, as we said, like I think Google, Meta, etc. Um, they all have um, like, I would say, much better, stronger businesses right now, even without the data, right? For Uber, where it's just like it's very noticeable that you don't have data, Google can still build very good ads, even if they're not collecting much data in Europe, just based on a lot of other things that they have in their pipeline, and understanding of like even search terms and things like that. They have like a very, very good AI. Um, so I'm not really worried about those businesses as much as like Apple and their App Store relations, and even this partnership with Gemini, I think is them really admitting that they're not as strong of a company as they used to be, and they're just being like kind of throwing up their hands and being like, hey, I don't think we can compete in this AI race. We need an ally. But I think that's a really important thing. And I think whenever possible, if you have the opportunity in this country or wherever, you should fight for your data rights, because like, our business model is very much along the lines of, the way that we see some of these hedge funds operating, where they're pulling things like real-time credit card swipes, camera data, satellite images, your web traffic data, your location data, all of that stuff they're using to make their stock models. And you're seeing zero for that. And worse than zero, they're using it to compete against you and beat you in the market. So that's pretty much the basic long-term strategy of Prospero, that we are going to create an environment where people actually want to share data with us. But other than that, like, you guys, I think, should do as much as possible. Like, I don't think these hits are bad. I think that, like, I still believe in Meta and Google's business, and Apple will survive this. How interesting they'll be as like one of the largest companies in the world, I'm not sure, but they'll certainly survive. But I'm much more bullish on Meta and Google's businesses, especially at these valuations. Even if, as I'm advocating, people rightfully should start fighting back against these, against these people that are like taking data from you and not letting you see anything from it, other than maybe better targeted ads, which, by the way, I actually don't mind the targeted ads, to be honest. But like, if you mind them, you're certainly not seeing anything from it.
So when you say it's going to create problems for these people that, are having all the data, um, what kind of tangible effect on the business will it be? It'll be harder for them to grow, or will they be unable to sustain the business they've already created? Or what kind of like actual effect is it going to have on, their revenue, their earnings,
Be more
the business
specific on
itself?
the question. Like, are we talking
So
about Apple? Are we talking about Google?
really
Um,
all of them, like, are they gonna have to reinvent the products and how they monetize the products they already have, or are they gonna just be unable to innovate in the future based off new rules that are gonna come into place?
I mean, no, like that's kind of what I'm saying. I think for something like Apple, especially with like, I think this is kind of like a larger regulatory problem where like I think they're just, beyond like the App Store gouging. Um, I think uh just privacy concerns is another hit. And I'm more worried about them because of like, I would say, their shrinking core business, right? Meta and Google are showing that even with these problems in dealing with regulators, they're still growing businesses, right? I think that like all we're talking about, like, just to be very specific for those businesses in terms of like ad targeting, right? They might be able to target if people are like, um and people just basically are making inroads on more data privacy, right? I think the ad targeting isn't as good in those locations. But what I am saying is it's kind of like when we talk about like Tesla's car versus the other self-driving cars, where like Tesla's car is actually, they have better machine learning, better like camera technology. So they don't need one of those like LiDAR detectors on top of the car, like the spinning thing, right? That's because they have stronger tech. I think you can look at Google and Meta ads in similar ways, where just like their tech is so strong that, yeah, their targeted ads, if they don't get as much data, their targeted ads are not going to be as good in Europe, and maybe that'll balloon into other places. But they have enough information on what they can get, um, that it's not like the ads are going to be horrible, They just might not have the same conversions, but they're still like very viable businesses. And the bottom line is it's all about competition, right? If they can't get the targeted ads, it's very likely that other people are going to be even in worse shape in those targeted ads in those places because they don't have the tech infrastructure that Google and Meta have to like generalize better with less information. So I think that that's kind of how you have to look at it. You always have to benchmark things. And I'm always talking about benchmarking. And if you benchmark this situation, I think we're basically talking about like, yeah, anybody is going to get hurt in those markets in targeted ads. But I'm just not sure that moves the needle to that much in ad-based businesses. And to kind of put a cap on the Apple thing, I'm much more worried about what it means for their business because it's shrinking. Um, and they don't even have a very good AI play. Like one of the reasons that I'm confident in Meta and Google is they've got good AI plays, right? That's not the same for Apple, who's like, we know they're not a good AI play because they're talking about contracting out both like Google and Baidu to help them with AI. So they're basically acknowledging they're not a good AI play.
Yeah, it seems like Apple's really lagging behind on the tech of the future, but we'll see. There was a story about how the government signed a $1.2 trillion package to keep the government funded through October 1st. And when I saw this, I thought about how like if this story had broke, last year, everybody would have been talking about, oh, inflation this, inflation that, like it's so much money, we're spending money constantly. And it really just shows you that like, time keeps on ticking and the problems of the market today are not what they were yesterday. And I don't know, it seems like it's kind of shows how the market environment is changing.
Yeah, I think we kind of like I forgot we declared inflation dead. I think maybe like 2 months ago in the email, basically in our newsletter, basically when we were seeing the predictions go down, like the predicted increases go down. Um, but yeah, I think that like that was kind of a joke and tongue in cheek and whatever. But I think a lot of the stock market was treating it that way. And like I think the only one kind of like holding ground on inflation not being like dead is Powell, but even he's like capitulating a lot. And it's his job not to like he doesn't get very far, especially if he's worried about the stock market kind of getting out of control, profits kind of fueling more inflation. Um, that being a major problem. Uh, but yeah, I think there's like as much as a joke, like I think people are kind of treating inflation like it's dead and they're more worried about stimulating the economy. And like I even talked to someone, I'm circulating this like, government theory a lot more in terms of like that I don't think they're not gonna let anything have a bad year this year. Um the stock market, that is. But I would also say to that that essentially what we're talking about there is um something with that they're not going to let it get that bad. That's how everybody's starting to treat it. And even something like, oh, I remember the theory that was being floated that it was just like, yeah, if consumer debt gets bad, people like this guy even thinks, and some of the people that he've talked to, and he's a pretty successful person in wealth management, that there's just going to be some kind of bailout. Because I counted with like, what about consumer spending, consumer debt? And I was like, oh yeah, they could very easily do that if there starts to be any concern about that. So yeah, I think that's one of the things in talking about like the melt up, the exuberant market, why we like, made another, bet on tech this week. Um, all of that has everything to do with that.
So maybe if there's one thing that could derail the melt up or so-called melt up, it would be if AI couldn't continue rallying. And this story kind of would play into that theory if it's possible, where AMD and Intel chips are being banned from being in Chinese government PCs and servers. And they're also looking to remove Microsoft Windows for internally built operating systems. Um, so I'm sure this wasn't too big of a shock to the market or these stocks, but it seems like the China USA, chip semiconductor tensions are continuing.
Yeah, we call this the chip Cold War, and or maybe the AI Cold War. But yeah, you gotta acknowledge how hilarious this is. That like China's worried about us spying on them. It's like, oh, where would they be, why would they be concerned about that? It's just pretty funny. But yeah, I mean, I don't know, especially with this like government chips bill, like I would not be surprised with government handouts that there's like expectations. Now, of course, it's kind of funny. Just like too little too late if you're really worried about like Microsoft like spying on you. I think you probably had them be doing that for a long time. And it's just like it's kind of surprising because like I think they have the wherewithal to like figure out if they're spying too. I mean, I think everybody kind of has the wherewithal to like dissect software and computers and like figure out if they're spying. You know, maybe there's a very clever backdoor in it, but who knows? Um, but yeah, I think in light of what I'm saying, it kind of strikes me as like some showmanship around this, where it's just like, are they really doing anything here? Is it really making a difference, or is this just about optics? And I think for both America and China at this point, it's just about optics because like for now, we're just like our economies are just like so interwoven and they depend on they depend on purchases from us and we depend on purchases for them. And we're both very economic focused countries. So it kind of like just, I think these shots across the bow that are just showing people that like, you know, I think it's probably both governments just showing that they're not going to take the mutual spying lying down. But, I think the mutual spying is probably going to keep going. So it's a kind of funny part about this story. It's just like a lot of things, it just has become political theater, in my opinion.
So even with that being the case, do you think um, you would have to be worried if you're an investor in a company that has a large portion of its business in China, just because these countries like just could snap their fingers and ban one thing, stop another, and would it just be in the back of your mind if you owned a stock? Say, I think I've mentioned these before, but like Starbucks, Nike, like stocks like that that have large portions of their business in China. Or is it just because these stocks are so technical that those are why they're getting banned, and like the companies that have more boring business, you'd say, aren't really as at risk?
Yeah, I mean, you know me. Um, I always think there's reason to be like manage risk. And these are risks. Um, I mean, on kind of like we can kind of go one by one. And if you have more companies you want to hear about, like Microsoft, I think there's too much going on with like Chat GPT and speculation that is like, I don't think this is going to be enough to really hurt them. And like, we might want to look it up for next time. I'm not sure how much Microsoft depends on like China for sales. And I mean, probably somewhat, but probably less than like a place like in NVIDIA that's not even mentioned here. Same thing with Intel. Like, I don't know how much business, like, we know like Nvidia does a lot of business in China, but that's just because their chips are like far and away better than everything else. And I don't think that's really the case with Intel. I mean, maybe for specific things that I'm not thinking of, but just like broadly, we know that, the reason Nvidia chips have, over 80% market share is they're just better than everything else. And they're not cheap either. But they are better and they are cost effective given how much faster they are. So you can kind of go right down the line, but that is like with any chips business, that's why I kind of have like a short-term outlook. I would definitely get concerned about Nvidia if I saw net option sentiment like creeping below the 100 level it's been at. Like it's been there and kind of similar to Tesla, even though upside breakout is a little lower than we want it. For Nvidia, we're still in it because it's holding down that 100 net option sentiment. Um, but are we concerned about that business? That depends a lot on China, and there might be more sanctions. Yeah, of course. But like, it might be interesting for us to look up how much Microsoft and Intel for next time even depend on Chinese business for us to situate this story even better and follow up.
Speaking of Microsoft in that fashion, you just made me think about how it's interesting that they weren't even in the EU antitrust. They were left out of that. Um, I don't know. It's interesting that I figured they'd be included. Aren't they just as dominant as like those other companies, you'd say, in what they do?
Um, Dominant. Maybe, like, again, I think we'd have to look up. Like, it's possible, like, I know they're dominant in the US, but I'm not sure how much the EU depends on like Microsoft computers and Windows, like versus Apple. Like I'd be interesting. Like, I'm just actually that's a little easier. I'm gonna do operating system market share PC UK. Yeah, Windows has 68%. Um, so yeah, um, yeah, Apple has 22, so it's like not like I don't know the definition of a monopoly, but that's like not I don't know if like having like a 22% competitor like in Apple would qualify you uh to be a monopoly. So that might be it right there. But I would also say Microsoft is way better with their diplomacy than a lot of like they're basically like you know, they're an older like B2B centric company. Like, I mean, they're pretty much like the oldest, still highly like, IBM is a very like, a graybeard in the B2B like tech sector, but it's definitely not doing as well as Microsoft now. So I would say of the like still like powerhouse companies, um, we're definitely talking about, Microsoft being a very experienced B2B operator, diplomacy expert. Like, and you also have to understand like selling software and an operating system is just not viewed as unfavorably now as like ads and like targeted ads and like all the perception and probably very real perception that people are being spied on to give them targeted ads. Like people hate Windows, but it's because they don't like how it works, not because not because they think Windows is spying on them. Like, if you asked why like people don't like Google or Meta or whatever, like, I would say Google's a better example because I think a lot of people don't like Meta because how they handle content, which again is something that Microsoft doesn't have to worry about. But anyway, I think you'd see very different reasons for like I would think by far the number one reason um, for Microsoft like not being liked is like the actual software, which makes it very different than those other companies.
I think a really interesting point you mentioned, which, now I'm just getting into speculation, but those other businesses, they focus around people. And if Microsoft is focused around businesses, um, government people who are trying to get elected are trying to be seen favorable by people, not really businesses to get votes. So maybe that's why they'd go after the companies that are directly involved with people more than B2B. Um, just a
I
thought.
think you're missing one thing. Governments generally care about businesses a lot more than people.
I
but
guess it shouldn't be
but
that way, but it is.
But yes, yes. But I think you're right in that I don't think the businesses like I think the businesses that are like lobbying, like Microsoft being like kind of shitty software is the least of the problems that businesses are lobbying for. But it's very, to your point, very top of mind, these issues for a lot of voters.
hmm So here's a story that we pushed back last week, but we're finally going to bring it to our viewers this week. Um, Take Two stock announced that they are going to be releasing Grand Theft Auto 6, which has been long awaited by a lot of people who, love the GTA franchise for a long time. Actually, since over the weekend when we didn't get to this last Wednesday, I saw they might be pushing it back to the second half of 2025 instead of the first half. So maybe it'll be like a holiday season game. Um, we know gaming is becoming more and more popular, especially amongst young people in terms of how they're choosing to get entertainment. Since this story is so far off in advance, do you think it's an interesting opportunity for investors to get involved in this company maybe before the whole hype cycle of the marketing of GTA and the news stories around it and all that get released next year when the game is actually out to play?
I think especially as a buy the dip candidate, Take Two is a great like buy the dip candidate because like yeah, like I think what we might see is we might see, consumer products really get hit. I'd say especially like, even if the overall market, we might see them really get hit in the second half of this year, especially I would say. Um, but That's why it's a great buy the dip. If you see it, hammered, if you see it approaching like anywhere close to like a 52-week low, I don't know where it's at, maybe a little below it or at it. Like I think it's a great buy because yes, I think to your point, a lot of it's actually a great point. I think a lot of people like a month or two before the release, without a doubt, are going to start buying it. They'll be like, oh, that's almost like you can count on retail investors to do that. And you can probably even count on institutions to count on retail investors to do that. So you might even be talking about a bit of a cycle where I'm just like, yeah, like we can keep our eye on it, check it out in the signals on an ongoing basis. But I think that's a good ongoing story to watch where like if we do see a dip, it might be something that we grab ourselves.
And we kind of flew through the stories today, so we're getting to our last story. So just for our viewers, if you have any questions, feel free to comment them right now. We have one more story to talk about before turning it over to the model portfolio, but we're happy and we love getting questions, so feel free. Uh, but DWAC, a SPAC that was tied to Trump and Truth Social for like years now, finally got announced that Truth Social got approved for IPOing in the stock market. It's estimated to be around a $5.7 billion valuation. Um, so obviously, no matter how you feel about politics and Trump, this stock is going to get just an insane amount of attention, especially as the election comes closer. Do you think that makes it an interesting investment or something you need to stay away from because it's going to be volatile?
Well, both. It's definitely interesting. Um, I don't really recommend people going for this kind of thing. Obviously, it's just highly risky, and I don't really recommend people like get into highly risky things unless they're unless you're also like and we could do some research. I don't know if there's that many things with Trump exposure, but like unless you were gonna like short something else like with Trump exposure, then that might be an okay pair trade. But there's just like too much volatility, too much manipulation in these names, like that it's just really hard. I mean, like as we always say, you could very well make a lot of money on it. But the other thing is that it's just like you also might be betting on the election too. I think is a good point. Like the best way to do this trade, if I was going to do it, which I wouldn't, is I would actually buy some you know, maybe in a few months and then hold it up until before the election because I think it will probably start going up into the election and then sell it before the election because otherwise you are really betting on the election, right? And betting on the election, I am not sure is a good idea at all. So, that's the thing. If you hold it through the election, you could make a ton of money or it could go close to zero because that's what you're essentially doing. You're betting on it. And I think it's going to to be clear, I think it's probably going to go up a lot if Trump wins. But is that something that you want to bet on? I think if you want to bet on it, you'll probably get better odds betting on him. Like, I don't know. What are the odds? Let's check it out. Trump wins election. Presidential election betting odds. This might plus 160. Well, betting, right, Steven?
Barely. If he's plus, he's an underdog.
Well, they're both underdogs. What the hell is this? Yeah, Trump is plus 106 and Biden is plus 164.
Yeah, so
So I
Trump
guess
has a little bit better odds in that case, but that's weird.
that's interesting. Maybe they're thinking about the field. Maybe they're thinking about him. Wait, what? Okay. Michelle Obama is in this at plus 2,900. Yeah. This is pretty funny. Um yeah, this is kind of interesting because yeah, the Democrats are plus 114. The Republicans are minus 102. So it looks like the Republicans are favored right now. But Trump, the Republicans are favored, but the betting market is not convinced that Trump. Um, that's interesting. I mean, I guess some of that is like maybe people thinking he might go to jail. Who knows? Um, anyway, yeah, it does look like you're getting better than a 50-50 shot on just betting Trump. So if you have a hunch that he's going to win, like you probably want to like you might be better off just like finding a site and betting on him to win than doing like a volatile thing like DWAC.
Yeah, it's kind of funny because it's like the memeiest stock of all time. When you think about it, like Truth Social, I don't even know anything like about the business, or I'm not trying to diminish it, but I don't know. It doesn't seem like it's that popular. So you're really just investing in it just for like the hype of it, and it's kind of a
I
very
mean, we
meme
can just
stock.
look. Is Truth Social like um public DWAC? Here, let's see. It's up today. It's up 12% today. I don't know what's going on with it.
Probably off that approval news. I think it happened on
Yeah.
Friday or a month or over the weekend.
All right, we're gonna look. I kind of want to just look at their projections. Uh,
That's funny. D Curtin said put your money 50-50 on both. I guess if they're both underdogs, you would make out unless another candidate wound up winning, and then you
yeah,
lose on both.
that's not a bad bet actually. With the at these odds, like I think it's like if you're not betting tons of money, like that seems like a good way. Like, but again, like if you're not betting tons of money, you're not really like clipping very much if you do win, you know. Um, I never understood like Yahoo Finance um is not showing me their projected, but let's just look at like their current. All right, so we're gonna look at their most recent quarter. Their most recent quarter, their wow, that's a surprisingly small business. They're they're just running at $1 million loss operating and an EPS of 3 cents a share. But yeah, it's almost like that's surprising. It's almost like just like a nothing business right now. I thought maybe they would be doing more, but they're like not even spending. Oh, yeah, no revenue, right? And then they just cost it like in the most recent like quarter, they just cost $1 million to run it. Wow. That's like crazy. Like I thought I might be shocked by something I saw there, but what I'm shocked by is like how small the actual business is that they're only spending $1 million.
So it seems more and more like something you might want to tread very carefully around.
I say bet on the election. I like bet on I like the bet on the bull thing. Like it looks like that's like a classic arbitrage, right? I mean, I guess there's some odds that like it's someone else. And I
Michelle
mean, but if
Obama.
you're not betting that much money, yeah. I think Michelle Obama is the third. Yeah. Wow. I mean, I guess that is interesting. I mean, they have been. I mean, I've been hearing whispers of Gavin Newsom, but he's like below Kamala, Robert Kennedy Jr. and Michelle Obama. That's so fascinating, and it's so fascinating um that the Republicans are minus 102, but Nikki Haley is like plus 11,900. So I don't know. That doesn't even make sense. It's like the betting market's not even convinced who like not convinced that they're more convinced the Republicans are going to win than Trump is going to win, but they're not offering it like they're not offering an alternate candidate.
I think it's going to be a crazy ending to the year. We'll see.
Yeah. I think it'd be really funny if that new like Republican House Speaker that nobody's heard of ends up being president. They're just like the election goes like crazy, nobody could decide who wins, and they're just like, all right, like the same Republican that was innocuous enough that he could be speaker when nobody could agree. We're just gonna let him do it. He seems like nobody hates him enough that he's picking sides. Oh my god. Yeah,
That's
election
just
betting odds. That's my official recommendation. Of course, this is just as my normal recommendations go. if I was thinking about betting on DWAC, I would rather just bet on Donald Trump. And if I wanted to hedge, I'd bet some money on I'd bet some money on Biden too.
Nice pair trade there.
Yeah, it's not a bad pair trade. I like it a lot. I like it risk adjusted a lot better than I like DWAC because you
Mhm,
can't even hedge DWAC as we said. Like unless, well, I mean, here's the other trade: buy DWAC and bet on Joe Biden to win.
mhm.
That's a better pair. That's a better pair trade than uh than just straight DWAC. Um, but also like we're making a lot like I don't. I just want to say one thing about it, like joking on this. I also think there's like a lot of these betting sites that are not very reputable. So please do not take this as a recommendation that I think any of this is a good idea. I'm just saying if I did consider any of this, it would probably be like instead of DWAC, it would be a straight bet on Donald Trump winning with a Joe Biden hedge. That would be my preferred enter into this trade, which is I have no interest in entering.
Um, do we wanna do our switch over now to, start the,
Yeah, if you don't have any
portfolio
more
update?
questions, I'd love to end a little early.
I just see Topher saying it's a joke, it's Dune, Mario, none of the above. So, but no questions for you right now.
I mean, to be clear, I am not looking forward to this election. I don't think it's my personal opinion that whatever happens, we all lose. It's just we're all going to lose, whatever it is. Like I know
We
there's
have
very
to build a
people.
better future at Prospero.
Yeah, exactly. I mean, I don't like and this is me lying very much. I know there's people on either end of the particular parties that really want their team to win. Um, and if your team wins, you probably will be happy that your team won. I don't really feel that strongly about either of these teams, and I feel like I just feel like it's a loss for me no matter what. But
Chris
yes,
is with you
Prospero is
in our
working to
chat.
fix these problems of hopelessness where the government can't really do anything. So there we go.
All right, we'll see you on the other. Oh, Spiky Dude, can I buy 0.0000001% of Prospero? That
Um,
would be
we
my
are actually
investment.
going to do some kind of crowd fund soon. We've been talking about it for a while, but we're actually gearing up to do that in the not too distant future. We're actually just to give you an idea, we're thinking about like we can do a straight like a regulated crowd fund, like or we can do a Kickstarter with like a lot of good bonuses and like free Prospero products that we might want to do, or we might do like maybe both or one of the two. There's these things called RUVs that get you like if for $1,000 minimum investment, and there's some like accreditation check there. There's um the start engine fees. We're actually talking to them. It's very high. Like that's the problem. They take a big chunk. And it's just like a lot of red tape and cost to get it up and running. But we might still consider that because we do want to give a lot of people an opportunity to participate. But as we get closer, we're gonna survey people a lot. We're gonna test interest. There's a lot of work to be done there soon. But I do think in the next like probably like three to 6 months we'll have it live.
That's awesome. Maybe we could give a perk to our viewers. I guess they'll know
Definitely.
about it.
All right. We're gonna go. We're going in the other room. I'll be right back.
Yep, I'll see you on the other side. You guys are sticking with me, chat, for a few moments while George does his switch over. Hope you enjoyed the topics that we covered on today's stream. We finally got to uh, the Take Two story GTA. That's one I wanted to get to for a few streams now. Um, while George is switching over, let me just update everybody on how the market is looking in Prospero currently. So we'll look at the QQQ and the SPY. Thanks for all your comments too, by the way, throughout the stream today. It's always nice to see all that. Okay, so the QQQ net option sentiment is at 46 right now. It was at 42 when the market opened today, so it's gone slightly higher throughout the day. And the SPY is at 52. So the SPY is well above the QQQ right now, and it opened the day at 49. So both are, oh no, 51. So both are going up as the day is going on. Good to see. Seems like the market is settling in for the day. Um, like I said, we got a short week on our hands. The market's going to be closed on Friday. So only 4 days to invest and trade this week. We will be live our normal time again Wednesday at 3 p.m. Any questions you guys want to, or stocks you want to look at specifically when George does his model portfolio update? Comment them. If you're new, what the model portfolio update is we just go through the stocks one by one in the portfolio and see how they're looking, see what stocks want to be added or dropped from the portfolio. Just a little update that we do at the end of each stream. And George is switching over to his other PC where it's a better setup for this right now. Let's see how our Twitter stream is doing today. The Twitter has been actually outperforming the YouTube recently, which has been a bit surprising since we've been on YouTube for so much longer. Twitter, 200 impressions, 73 views total. YouTube, our YouTube community, we got to keep growing. We got to share the video, like the video, subscribe. YouTube is where it's at in my mind. We got to keep growing the stream on here. Let's see. Let's see if we can get to 20 likes again today. Where are we at right now? I'm asking a little bit late, so I have my doubts that we can get there. But if you're still watching, like the video. Let's try to make that push for 20. George is back in here. We're at 8 right now, so 12 to go. Let's see if we can reach it before the stream's over.
Hello?
Hey, George.
I can hear you. You know what? I think I have something else I got pulled into. So I think we're just gonna skip it. Sorry, everybody on the model portfolio. I think we're skipping it today.
All right, viewers, you'll have to come back for Wednesday's stream
But
then
any
for
more
anybody who hasn't seen it
questions?
before.
Yes. Any more questions? I'm happy to answer.
We'll give the people a moment. We're making that push for 20 likes. I see it's at 11 now. Sorry we have to end the stream early, but I asked late.
All right. Well, thanks, everyone. We'll see you later this week.
All right, we'll be back normal time, Wednesday, 3 p.m. See everybody there. Good speaking with you, George.
Bye-bye.
See you Wednesday. Bye, everyone. Thanks for coming.